This was where all the action happened, folks, here. So remember, priced at 17, but we opened at $24. We're talking about 40% more, and it's held up. We're about $25 right now. It's traded almost 200 million shares. That's how many shares they floated. Anytime you trade the float in a day, that's big, big volume. So the demand is there. Looks like we're going to close at the moment above that initial price. Why this pop? Why did it do so well? Well, three reasons. Number one, the stock market's at a new high. That's the main thing. Number two, there's been a lack of demand for big IPOs, a lack of IPOs that are out. There's been big demand, but there hasn't been enough of them. Here it is, coming to save the day. And finally, it's got a very small float, only 14% of the company. That helps improve the demand. Hey, $35 billion market cap. You know, that's the top third of the S&P. They're not in the S&P, but look here, that's where Norfolk Southern is. It's got the same market cap as Norfolk Southern, as Deere, General Mills, Travelers, and Marriott. This is a big, big IPO, the biggest one since Alibaba. We've had a number of first-day pops that are big, like 40% or more. Twitter did it. Box did it. Some of the other big names did it a little while ago, so Square and Alibaba, Fitbit. I think the problem here, guys, just because you pop 40% doesn't mean it's going to happen. A lot of these companies, this happened with Twitter and Alibaba, 6 months down the road, they kind of hit a wall where they start drooping a little more, and that's when you really find out, when it really, the pedal really gets to the metal.
The interesting thing here, I was going to say, it's not just technology companies too, because yesterday we had Shake Shack's earnings, a reminder of how that's come down from its IPO price. But remember, these Snapchat shares, they don't have voting power. So when you think through Facebook's IPO, how it did, you know, that was a struggle at first. It fell to 19 bucks a share because they didn't have that mobile strategy. You can at least say that Mark Zuckerberg, pressured by the share price, said, hey, we're going to right this ship. And the interesting question for Snapchat now is when they inevitably face some change in the market, will they similarly be able to kind of change course and match?
Yeah, and of course there's a lot of questions. You could say, hey, 40% jump, did they leave too much on the table? Did they underprice it? You could sort of make that argument, but the bottom line is I look at a broader picture. This is a great green light for the other IPOs that are waiting, and we've been waiting for the market to turn around in IPOs for 7 months now. The calendar's starting to fill up for April. That's why I think it's important. And yes, if it holds up in a couple of months, they can sell more shares down the road at these kinds of higher prices. So my opinion is I'm fine with it, and let everybody gripe that they undersold it. This is good news for the overall market, good news for the IPO business.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.